Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Wednesday, September the 18th. Markets put another green day yesterday. Dow Jones up 34, S&P up 7, NASDAQ up 27. Today is going to be the Fed announcement on its tapering of its bond buying program. So we'll see what happens and see what the market's going to react. I do think that whatever they do decide, positive or negative to what the markets are going to do, we're going to have... that's going to basically put the trend in for the next 3 to 4 weeks, and then we're going to go into earnings season. That's going to be the next factor going into the fall. So it's going to be really interesting today to see what happens. Now, usually in the first couple of days, really don't have much going on, and markets did rally, but didn't rally much. We're still under, or I would say at Monday's highs. So we put in another inside day from the previous day, which would be Monday, making that big high. And we'll take it one step at a time. Usually today it's going to be a non-event until the announcement. So I would keep your palates dry, guys. There's going to be plenty of opportunity tomorrow, Friday, and of course the next several weeks to come. And I think this next quarter is going to be a real doozy. I think we're going to get a lot of volatility and a lot of opportunity. So you don't want to be taking big losses or getting beaten up. Keep the palate dry, keep your mindset right, and let's move on. So I do think that there's going to be some great opportunity here. There are some small developments coming in I wanted to show you in the indicators. We're getting a little bit of divergence, and that I want to point out. Then I want to cover some of the currencies, some of the majors, to see where we are with that. And of course, we'll do a quick update on the metals and see where that's going. Then we'll go into the chart segment. So right in front of you is the McClellan oscillator. The trusted McClellan oscillator is now starting to read overbought. Not quite there yet. I'd like to get this above this area and really start to shoot up, break above 70, 80. Remember, guys, we are now challenging the highs, and we've been up for probably 7, 8, or 9 trading days in a row, if not in between 1 or 2 down days. But the markets are a bit stretched again, and that's really the theme, right? 2, 3 down days, 7, 8, 9 days straight up. It's very frustrating if you're not obviously taking on positions and you want to take that overnight risk. But be very, very careful. There definitely are signs that the markets are due for a pullback. And with this market being overextended, one little bad catalyst can really send the market's tail spinning down lower. Now, I'm not saying a crash, but we could be at least, quickly on the downside. And remember, we are in seasonal weakness right now between now and the next 3 to 4 weeks. So, yes, have we seen it? No, we have not. And again, history doesn't have to repeat itself, but this is a time that we usually get a little bit of a correction or a sell-off to what we had prior to the last 2 weeks, prior to this rally the last 2 weeks. So just keep that in mind, okay, when you're trading. Day trading a little different, obviously. But also when you're day trading and the market continues to go up and up and gaps up and stays relatively where it is, it's very difficult to find quality trades. And that's why I keep saying, just keep the palate dry. Believe me, there'll be plenty of opportunity. All right, so McClellan oscillator is reading, starting to read overbought. So that's going to be a little bit of a concern, which we want to keep note of, take note of. Here is the new highs. Now, here's where there's a concern, right? We have, as you can see, divergence where the market is actually making or at its highs right now. The new highs in stocks are actually lower. That's not a good sign. If so, what's telling it? It's really the indexes are moving, not quality stocks. The big stocks that are in the indexes are not moving. They're not making new highs. That is a big red sign. That is a big red sign. So please keep that in mind as well. Stocks above the 50-day moving average, not there. Markets are at its highs. Stocks that are above 50-day moving average are actually lower. So we have divergence again. Keep that in mind too. Stocks above the 200-day moving average, divergence, lower. That should not be. So we have indexes that are just moving. Some of the bigger key indexes are moving the markets, not the stocks. So this is something that is a very big concern for me anyway, as a technician, to say, well, wait a minute. If we're at its highs and we're looking to break out to new highs, we really need stocks to come along with us. So is that going to happen? That's something that we really need to keep a close eye, and that's what these indicators do. Is This is more for if you're really holding positions, but it's a good to know when you think that you're a little bit overextended, because obviously you don't want to be looking to buy the market during the day and then the market start to roll over. So this is a big red flag here, guys, for what I'm showing you. Let's take a look at. I wanted to show you one more thing. New highs. Okay, so you know what? Let's go. Let's go. Oh, the U.S. dollar. Take a look at the U.S. dollar now. The U.S. dollar and the metals are going to play a big role today, or what the Fed does. And as you can see here, we did get a little bit of a move back up, but we're still below some big area of resistance. We've got the 200 below the 2, the 50, and the 20. So this has a lot of work to do, but I do believe that you're going to get one big rally before the end of the year in the dollar. Okay, so let's take a look at the metals. We have copper. I think the copper and gold, we had a nice little area which we never got a chance to sell. It touched it, rolled over, and never saw it again. We never even got a back test. But now I think the GLD is in a critical spot, which was obviously gold, and it may be due for a bounce. And here's copper, right? So if you see copper kind of in this bull flag, I think it's a little too long now for the bull flag, but copper looks like it's ready to break down again. Now let me show you palladium. Now this is the leader. This is the leader out of all of the other metals. It's the quiet leader, right? Everybody really doesn't follow it, but if you're in the metals, this is what you really want to be looking at. Now it is breaking a little bit above of this little channel of consolidation, but look, has a lot of overhead resistance, really not going anywhere. And if this starts to move lower, watch out below for the metals, because this will take everything else down. Here's here is platinum. As you can see, platinum's already moving lower, and that's something that you do not want to see. And here's gold. As you can see, gold now starting to break down here. We had that little bull flag which failed, and now we're starting to roll over. Now this was the area that we were looking at. Literally touched it with a penny, rolled over, never got a chance to backtest. Now I'm looking for this bounce here. If gold can bounce right up in here one more time and get into this area of resistance and then fail, then I would be looking to get short gold, at least for a big flush down, at least to test this area here. Now I would be a much better buyer of gold into the 1,000 to the 1150 area in gold if it does get there. Now it could be months from now, but just keep that in mind. I'm a better short seller of gold here in these areas than I am a buyer. All right. Now again, price needs to get up there in that area and needs to roll over and start to move lower, making lower lows and lower highs. But right now, I do like this lower as far as gold. We're looking for an entry in gold. All right, so let's take a look at USO. And as you can see here, we're really at the 65%, 70 percentile in the bullish percent ENER. And we have USO starting to roll back over again. Now, I'd love to see this thing get back into this area here. If we can get back in this area and hold 36 and a half and hold, and the bullish percent start to roll back up again, then I would be looking to buy USO again. Okay, not until then. All right, and then let's take a look at our currency pairs. Really no change, right? Euro dollar still hanging around here. However, I'll show you the spot euro. It's starting to come back into my range where I like the 134 area. As you can see here, it's been bouncing around from May, June, July, the whole summer in this area, and it can't break out. It's been failing. So if this does fail, I'll probably look to get short euro dollars again. Here is the dollar Canada. As you can see, and I showed you last time, we're still in a range bound. We broke out but failed miserably and came back in again. So a lot of these currency pairs are still in ranges. Look at the dollar yen. Watch it though. I do think that the currency pairs are going to break out of this major consolidation since March. And when that does happen, everything is going to follow again. So just keep an eye on these majors, guys. You don't have to trade them, but keep an eye on them. It's actually a very good indicator and a very good sign of where things may be headed. Okay. All right. So now let's get back into our chart segment. I know there was a lot of info, but something that you really needed to be aware of. And now let's take a look at the spiders. As you can see here, really nothing has happened here, right? We had the gap up. We had an inside day from Friday, an inside day from Monday actually, and Friday. So we really haven't gone anywhere, but we are holding up in the range, which is still positive. So I do think, remember, long term, the markets look really good on the chart, the weekly chart and the monthly chart. but we are very elevated, very overextended here. As you can see here, we've been up for we have the gap ups, and the market just doesn't seem to want to go down. So you don't want to fight it. You definitely don't want to get short. But if we can break this Friday's low, if we can break Friday's low of 170, 169.90, call it 170, and start to head back lower, again, it's all going to be on what the Fed wants to do. So keep that in mind. And as you can see here, look what happens. I want to show you this chart. We've had several days on the 60-minute of consolidation, virtually no movement. We had one pop up, and we did fade a little bit on yesterday, 2 days ago, and then we had a pop back up again, a gap up in the opening, and then look what happened, literally sideways. This is not the volatility that we're looking for, right? It's one-sided, a gap up, and it just grind higher all day, or they stay in a sideways consolidation for another gap up. So day trading is actually a little bit difficult. So if you need to be looking for catalyst stocks that are moving on catalyst stocks that are downgraded, upgraded, earnings, something that's going to make the stock move. But if you're looking at this, as you can see, this is what the index, they go up and they stay up and they gap up again. So it looks like they're moving in a big way, but they're just gapping up and sideways consolidating, as you can see here. Okay, so just want to show you the 60-minute chart. Here is IWMs. IWM, same thing, inside day from the previous day. So let's see what happens. Today is going to be a deciding factor from the Fed announcement. And here is the transports. Again, holding yesterday, the previous day, but just under Friday's low. So keep an eye on the transports here. Now here is this. I had put like a little makeshift head and shoulders panel and said, could this be a head and shoulders? But right now we are still in the inside day, but just barely. Would look like it might be breaking out. So take a look at Goldman. Goldman looks like a pretty decent market mover if the market does want to move higher again. But we'll wait and see. I would be waiting. I wouldn't be putting any new risk out there. Here's Apple. Apple was down in the morning and then started to rally. Is it the time to buy Apple? Not yet. I'd like to see a little bit more. I'd like to see the hold. It's going to have to hold the low 446, but it also needs to take out this area. If we can take out 461, then I would look definitely for a shot, because now you can manage it, right? You know where your low is going to be 447. Call it 446 will be your ultimate stop, and then look in here to look to buy. If today we can get some sort of movement out of the markets and Apple starts to really move up higher, then you could start accumulating it. But not until then. Right now it's just a trading stock. But at least you could identify your risk. It's right down here below 446 would be a stop in anything you would do, either day trade or a swing trade. Lastly, guys, is the Qs. As you can see here, again, an inside day. So quick recap, we have inside days from Friday. Markets really need to break out. They are holding their gap. So that's also positive, but we do have some divergence coming in from our indicators. Stocks above the 50, stocks above the 200-day moving average. Our new highs, stocks are not making new highs. So we do have red flags out there. Okay, VIX. The VIX actually was holding its own from its area. So you got to be very careful here. This is a very dangerous market. If you don't know what you're doing, you take a step back and just let the markets come to you. If you do, I would still be, pulling in the reins a little bit just to see where this market goes. Let the Fed announce, let the market go crazy for a little bit, and then let it tell us which way this market is going to be headed. And again, we have earnings season coming out in October. I do think we see some nice volatility going into earnings season. We are in a seasonal weakness now. So I think we'll get a pickup in volatility going into October, and then, of course, earnings season would take over. So I do think between now and December, we should have some great opportunities. Keep the pallets dry, keep your stops in place, and let's see what the Fed says today. Have a great day, and we'll speak to you tomorrow. Take care.